Hello and welcome to the Signia Market Review for April. My name is Gregoire Sharma and I'm the Fixed Income Fund Analyst here at Signia. Markets in April were driven by deteriorating investor sentiment on the back of weaker global growth due to the ongoing war in Ukraine and COVID-19 restrictions in China. Risk sentiment was also shaken due to concerns that persistently high inflation rates could lead to tighter than expected monetary policy. Commodities provided one of the few respites over the month. Major equity indices were down in April on the back of growth concerns and despite upbeat earnings reports. Indeed, the IMF cut its global growth forecast for 2022 on the back of the Russian invasion of Ukraine, with further downside risks should Europe boycott Russian oil and gas. US markets fell the most, with the S&P 500 having its third worst start of the year in history, as heightened concerns surrounding the pace of monetary tightening triggered a widespread sell-off, particularly amongst higher growth names. European and Japanese indices also fell, but did so significantly less than their US counterparts, while UK equities actually managed to record a positive return for the month owing to their exposure to commodities and better relative valuations. Chinese bourses also witnessed falls as the perceived lack of economic stimulus and strict lockdowns to contain COVID-19 weighed on risk appetite. At a sectoral level, all global classifications were down on the month, with the exception of consumer staples. Energy was also a clear outperformer. Indeed, turning to commodities, oil prices finished the month up on the back of ongoing concerns about tight worldwide supply as the Russian invasion of Ukraine and sanctions on Russia pushed fuel and natural gas prices to record high levels. Global sovereign bonds fell as rising yields hurt higher duration assets. The latest inflation figures have climbed at their fastest pace in decades, pushing the US Federal Reserve to be more aggressive in raising interest rates. The US 10-year yields rose to the highest level since the end of 2018, approaching 3%. Markets are now pricing in interest rates of well above 2% in the US and the UK by year-end, while Eurozone rates are expected to move into positive territory by Q4 this year. Risk-off sentiment also affected spread sectors despite robust fundamentals, with the sharp intra-month rise in market volatility leading to a widening of corporate credit spreads. Investment-grade credit underperformed high-yield credit due to the former's inherent higher duration as interest rates rose on the month. Emerging market debt indices registered the worst performance in April as heightened market volatility, increased COVID-19 related restrictions in China, and a surge in the US dollar all contributed to poor performance across the board in the asset class. That's it for the month. Thank you for listening and see you in May.